All right, what's up, everybody? How's everyone doing? How's everyone's Tuesday night treating them? I'm not sure what 2 miles means in that context, but hopefully that's a good thing. So who wants to kick things off here? Feels like it's been a while since our last one, eh? Oh, I got two mics. Oh. Test, that better? That should be better. I don't know why it does that. All right, so who wants to kick things off? Who's got the first question here for the evening? So 30K on NQ1, how much longer can it run and how high can it go? Truth be told, I don't think anybody knows. The reality, though, unfortunately or fortunately, is that markets can stay irrational longer than we can stay solvent, at all-time highs. Everyone who's long is profitable. If you bought, heck, even if you bought here today at yesterday's or at today's close, you're green right now. So I wouldn't overthink it or like get stuck on that, right? I think it's really easy to find a really smart reason to fade a running market, and that's a really easy way to lose a lot of money. So just trade the price action that's in front of us, right? Let's not focus on, like academically or whatever, this isn't working out how we expect. No one cares, right? In reality. So I think it's important that we just trade the price action that's in front of us, and hopefully we can get some smooth moves as it continues to squeeze. So a question from Shirley here. How do you know how much a candle is going to fake out before it starts going in the right direction? Is there a percentage? Again, it's one of those things you don't really ever know. It's not like I'm necessarily looking for a 5-point fake out or a 10-point fake out or something like that. I just generally want to see some sort of evidence of bears failing. So if a fake out's 100 points, sweet. If a fake out's 5 points, sweet. Fundamentally, they're all the same. Each setup and each kind of individual trigger is going to be unique. So I think to like box in a rule that way probably isn't the right path. In my experience, the way that I view it, right, is if I think it can go lower, it generally can. So, not always perfect, but when I think I can still get an entry or when I think it's time for an entry, I'm still usually probably early on that idea or early on that thesis. So why not wait? You don't get paid for being early. So I would rather be too conservative and miss the fake out than chase a losing trade. That's a fine balance, but that's always the objective. So David, you ask a question here. I use Trader Sync with approximately 10 to 15 prop firms, depending on the day. I mix minis and micros. Is there an advantage to keeping everything on micro and set to 10 micros instead of one mini? Depends. What I will say is that when you start to trade minis and micros and you have a more complicated execution, complication doesn't necessarily lead to more efficient price discovery, right? So I think it's always easiest to trade the same instrument across all of them. I've never personally traded like micros on one account and minis on the other. It's just becomes like too galaxy big brain for me. And it makes it hard to know like when I'm actually seeing slippage, or hard to evaluate certain other criteria. So, personally, I think your execution is always going to be better the simpler it is. And the more variables you have to consider, the harder it gets. Yeah, like if you're going to be trading 10 micros, I would just consider just trading a mini or two minis at that point. You'll pay a lot less in commissions, right, as a starting point, and that could be a pretty significant number. Like 10 micros, you'd be paying 30 odd dollars in commissions a trade, right, on an open and close, and losing $60, right, just at the start or exit of a trade. That could really eat into your edge on a micro. So, that for me would probably be the biggest consideration over why I'd want to trade minis. And then just from an execution perspective, right, it's easy to evaluate which firms give you more slippage or which ones get you better fills, et cetera, when you have a consistent instrument that you're executing on. Good man, Tony. Love to hear that. Best loser wins. Hardest thing to accept, but it's the number one form of reality, I guess, of what makes a profitable trader. So another question from Shirley here. Sometimes you say something like, I still expect it will flush through this number. How do you know? I think it's just one of those things where I'm going to trust my intuition in that moment. So when it comes down to trading, right, the big part of trading is it's kind of half art, half science. So the science part, right, is having consistent risk and, the same setup triggers and the same confirmation standard and things along those lines. The art is taking new information as it's presented to you and kind of updating or improving your trading plan. So kind of going back to the previous answer I gave you, is if I think I'm early or if I think I'm ready for an entry, I'm usually still early. So why not wait, right, to see if I'm early or not effectively? Worst case scenario, I don't lose any money. Best case scenario, I get a better entry. So I kind of have asymmetric upside to being more deliberate in that process. But when I find my flow state during a trading day, I'm willing to listen to those feelings that help me get a deeper discount, right? Because the deeper discount I have, the more margin of error I can create for myself. And if I can turn a thesis into something that maybe is simply profitable just because my entry was good, that makes life really easy. So it's kind of a way of A, delaying gratification, but B, kind of increasing my margin of error. And that long term makes me more money over the next, 1,000 trades, maybe not that one. What else we got here, team? No, I haven't changed my risk size. So at the moment, I'm still trading my 10 contracts. The only reason I would change my risk is twofold. So one, if I took like an extended break from trading, so let's say I didn't trade for like 10 days or 10 trading days, like 2 weeks, then I'd probably get back to like wanting to like warm up effectively back in the market. The other thing that would or force me to change my risk is if I felt as if I was like breaking too many rules or going on tilt too easily. So, yeah, if like I felt like I had back to back days where I was overly emotional or everything was just driving me crazy, whatever it is, then I would like to mitigate the emotional response that price action could create for myself, or at least make it easier for me to regulate my emotions. You know, even though I'm trading 10 contracts right now, that isn't my like theoretical peak that I could trade, right? So I kind of build in my ability to manage those ups and downs by not being at my maximum allocation at all times. Um, so that would be it. So if I catch myself, tilting a little bit too easily, I'm, breaking rules too often, I'm chasing trades, doing whatever, that would probably be something that would indicate to me that my sizing is too big, and I'd like to make my trading academic to basically reestablish a baseline. I don't like the idea of reacting too much to my P&L. I want to react to my behaviors that generate or create that P&L. And so if those behaviors start to become inefficient or, like a gambler's mentality, etc., that would be my reason to get out or to size down. Is it possible for you to trade more in the morning? Say, have another account that you can go to so that we can get more practice? Um, I don't like that idea personally because I don't think that's actually how you learn to trade, right? So, my job as a trader is not to actually trade, it's to study my decisions and to create tests over why I'm behaving in a certain way, right? So, if I'm um yeah, I wouldn't know how I would necessarily separate that mentally, and it probably wouldn't be very fair if I was saying like, "Oh, this is a practice account trade," and then you know call that out and trade it normally, and then the next one's like, "Oh no, this is a real trade," right? That probably becomes really cloudy in my mind, and I'm not super into that. What I would say is that the work or the improvement happens outside of market hours, asking yourself, what's one thing I did well? What's one thing I can improve? What's one thing I can focus on for tomorrow? Answering that question honestly on a daily basis will improve you as a trader much more than placing 100 trades. So, any advice about how to deal with the way that deep charts moves the stop to maintain the risk that you had in the trade window rather than giving a discount if you choose to enter at a lower price? So let's say that you have your stop loss set at 107, right? And you get in at, I don't know, 115, right? That would push your stop loss to then 105. What I would recommend doing, right, is having the drag and drop feature enabled on your account. And then they're going to have a line that shows up on your screen. And then you just move your stop loss up or drag it down to where you would like your stop loss to be. For sure. Truly, most of the time I average like 3 to 4 trades a day, right? So that's plenty of action. That's plenty of opportunities to learn. Um, but yeah, you don't get better by trading more. You get better by studying your trades. And I just don't know how I would separate this is a practice account trade versus a real account trade. I think it would create scenarios where people get tilted, right? Where I take a trade in the real account, that's a loss. People will say that it should have been a practice account trade. When I get a win in a practice account, people will say that should have been a real account. And it'll just create a lot of confusion. I think a big goal of mine or a big objective of mine over how I run this business is I would like to offer as much transparency as is possible or as is reasonable to provide people. And if I start to confuse people over what trades to take and all this kind of stuff, you can start to pick and choose. So for me, every trade is worth taking that I take. Obviously, I'm going to make some mistakes here and there, but there are going to be times where you make money and times where you lose money. There's times where you're going to have one trade, times where you have 10 trades. just a part of the game. Um, and yeah, wouldn't judge yourself on that too much. I don't know if I agree with that necessarily. I wouldn't say I agree with that. Like today, I had 4 trades. Friday, I had one. Thursday, I had 5 trades. Wednesday, I had 5 trades. That's a lot of action. I think the other thing to remember, I guess, to a certain extent, is choose what you're optimizing for, right? If you start your trading career and you learn how to trade, and the only way that you make money is by placing 100 trades a day, and you're all day in front of the computer, would you really be thrilled about that at your deathbed, right? When you're old and you're gray and you're thinking about what you could have been? Or would you rather have had more freedom to spend your time doing things that you enjoy? For me, right, I think, I mean, hopefully, like I've said this before, but hopefully on the day that I die, I'm trading. But I don't think I'll ever be like, oh man, I wish I traded the Asian Open more often. And that's just life, right? So personally, I'm optimizing for freedom, not necessarily optimizing to make the most amount of money. There'd be a lot of other things I could do to increase my P&L, I guess, probably if I really wanted to, but at a cost of, losing my mental health, or losing my ability to manage my time and do those things. Like today, um, I worked in the morning, traded, not the best trading day, fine, and then spent a couple hours working on the business, and then I had the opportunity to go for a bike ride, and then I get to do this, and that for me is a much more enjoyable day than spending 12 hours in front of the computer stressing out over each decision. Yeah, me too, Bijou. Sucks, but that's life, right? I can do everything right and lose money. I can do everything wrong and make money. I'm not judging myself on a P&L. I'm judging myself based on how well I followed my rules. And on 3 out of my 4 trades, I think I followed my rules pretty well. There was one trade here today that I probably shouldn't have taken in hindsight. And that's something that I can learn from and improve. And that's the thing to focus on. Regardless of how hard I try to optimize my trading, I'm never going to be green 100% of the time. It's just not reality. So I would rather learn something when I make a mistake or when I have a challenging day. And if I'm going to pay tuition to the market, I may as well learn a lesson from it. And today, I think I learned an important lesson that, the market might be squeezing, but that doesn't mean you have to chase the move. And hopefully tomorrow I can make those adjustments and have a strong trading day. Yeah, well done, Tony. I think what's frustrating about trading, or what can kind of work against us here sometimes, is it feels as if we need to press the gas harder to speed up our progress. But in reality, that usually just slows us down, because we hit the highs really fast and then we hit the lows really fast, and we kind of just end up in a cycle of just constantly resetting and never really improving. So it's annoying how it works, but you oftentimes have to be the tortoise, not the hare. And yeah, it is weird like that. You kind of have to neg the money a little bit. Like you kind of have to make it not have that pull on you, or not not have that power over you to a certain extent. And the less you can care about it, and the less that you create like that pressure for yourself to care about it, generally the better things go. One of those great contradictions, because what makes trading so difficult is that it's very contradictory to everything that we've been taught in life, right? Where you're taught, okay, I got to be at the office 12 hours a day, and first one in, last one out. I have to study for this exam for 10 hours, right? I got to do this, I got to do that. Trading rewards the opposite of that. And it's tough. It's tough to fight that like lifelong pattern on those behaviors. So that's ultimately what's so difficult about it. You have to fight human nature to a certain extent, and that's why most people struggle, because they succumb to the other habits that they're used to rewarding, but those same habits aren't rewarded by the market. What else we got here, team? What other questions we have here this afternoon? Anything? Anyone? What do we got? Do you find that the events in the Middle East have made trading harder or easier? I don't like the idea of the markets ever being hard or difficult. I think they're always the same. Um, when you get a news driven market, I think what changes, or a headline driven market, is what changes is that you kind of get like periods of extreme nothing and then periods of extreme volatility, right? So you get periods basically where headlines are popping and periods where headlines aren't. I think trading is always difficult, or it's always easy. It's always the same, right? The market is the market. So I don't like giving stuff like that power over me effectively. But there are times, right, where your strategy is just more effective in certain periods. And there are times where your strategy struggles, right? When it comes to a news driven market, the reality here is that the reason I don't trade news is because I don't have an edge trading it, right? I'm never the first to know when something happens. So I'm always reacting to things. Whereas when things are more like a pure price action market, like we saw, from like October to March kind of thing, then you just deal with more technical concepts, right? And so you get follow through from technical breakouts instead of news driven ones. News driven breakouts can often occur in like the middle of a range or middle of the day or whatever it is. And it creates maybe a more challenging pattern if you're like a technical analyst. But in my opinion, markets are always the same. They're always tough. They're always easy, and you view them based on your P&L, right? So your perception of how hard they are or how easy they are is based on P&L. I would say that um like if you're a long-term investor, there's never been an easier time to relative, right, to be bullish. If, when we were trading this like chop period where it was one day up, one day down, well, that made it really easy for me because I'm always willing to have a bias in both directions, and so I could play the tape both ways. Um, but no, easy or difficult is a nice way of like describing your P&L, right? You're always going to judge it based on that. So I don't want to be hurting my ego or boosting my ego based on what my P&L shows that day. I want to just be thinking about, okay, what are the variables I can control? How can I do this? The other reality of trading, right, that your P&L does not go up in a straight line. Experiencing periods of drawdown is totally normal. It's natural. It is what happens. It's just a part of the game. And if you can't accept that, you're probably not in the right mental headspace to actually be a trader, right? So, I can't guarantee that my next day is going to be green. I can't even guarantee that my next year is going to be green. All I can focus on are the variables I can control. And based on the historical data, right, and like my back test and my stress test and how I've traded over the course of my career, I can infer that things are going to go well. But I don't know what that time frame looks like, so I don't want to judge myself on that too much. But yeah, like um, there was like a period in I don't know, might have been October where I had like something like 40 straight green days, and those are just periods where hey, you're trading your very best. It's like I don't know, a baseball hitter who has like a 27 hit streak, right? You sometimes you just see it well, sometimes you don't. It's just a part of the game. So, variance is kind of a cruel mistress. Sometimes you outperform it, sometimes you underperform it, and it kind of just averages out over a sample size. And it generally isn't one day up, one day down, one day up, one day down. You kind of go through these periods of streaks. In I mean, probably the fight or the feeling that I've been fighting a little bit here, maybe, right, is that I'm probably being a little bit too active right now in the market, which is tough to stomach. It's not that I'm seeing things poorly. I'm seeing things fine, but uh, like I would say, the theme, if I look back on my last like 10, 15 red days, on each of those days, I have like a trade or two that I probably shouldn't have taken. On those green days, you don't get those same sensations. So there's, ways that I could probably make my life a little bit easier that I'm maybe not being as aggressive in taking. Sounds good, Tony. Enjoy. Appreciate you joining. And man, well done for being a disciplined trader here today. What else we got here, team? Any other questions? Yeah, so it kind of went back towards like the midline here of the opening range. So I think we had a nice setup here on the 3 min. That's probably where it was most prevalent, right? So you kind of had that like touch of high a day, arguably a breakout above high a day, but then no real volume showed up until that 11 a.m. candle. At that point, right, maybe the easy move of the day was kind of already finished. This candle for sure at 11:06 would have probably scared me off a little bit. If I look at this on the 2 min, maybe I could have gone an entry on this here at 10:48, right? There's your fake out, and then it breaks down and it kind of is a straight line down towards like that 900 area. But the path of least resistance here wasn't to the downside. The path of least resistance was to the upside. So I'm not sure. Like, it was a good move, but I think based on, my trading strategy, I probably would have talked myself out of an entry there. Generally today, right, we had it's just trend day to the upside, right? Really big bullish volume. Even today's open, right, was really big volume kind of relative to our previous bars. That was the best effort bears could really give us on a sell off, and then pretty much bulls in control rest of the day. So sometimes you still want to fight the trend, even if there's a pretty big move to the downside. And that's easier said than done sometimes, especially when it, sells off 200 points. But kind of goes back to the markets can remain irrational longer than we can stay solvent, and just don't need to fight price action. So, good job, Dave, for not forcing something. Like, that's probably the right outcome. So, I mean, we have plans in the work. We've signed up, we've signed all the paper, we've signed all the data agreements and all this kind of stuff. Just working through their queue of getting onboarded and then hopefully get everything set up and rocking and rolling for people. So we will hopefully get TradingView set up here soon, but I have no clue on how long that process will take. You know, Signed everything maybe about a month ago. So I would hope in the next month or two I can kind of finish that process. But honestly, who knows? The the costs of running TradingView are significantly higher than the costs of running Volumetrica, about 50% higher per user. So we'll have to figure that out as well. But yeah, we'll get there. In general, I have like about $35 of fixed costs for signing people up on Volumetrica, and then like $15 per user as like account management fees, things like that. So we got to find that fine balance. I think I talked about it a little bit today, but on most accounts, I'm losing money at the moment. It's not something that's super sustainable. So we will have to change things, and we will change them for June 1st, like we talked about a little bit here today. The goal from my perspective is to run the prop firm at break even. Um, and yeah, scale it up that way. That for me is the best way to do it. My objective is to get as many of you people on the portfolio manager path as possible, and then to take a cut of your trading profits once you're fully unrestricted. But we got to find that fine balance. And yeah, we'll figure it out. I don't yet. I have a few people who are trucking along really nicely. The path to going live here is 30 green days. Once you put up 30 green days, then we put you towards that live program. And we just haven't been open for long enough, truth be told, right? So I imagine we start to see our first people go live probably by about month 6, kind of in that range, and then it'll start to compound really fast. Yeah, we've got a couple people who are like in the low 20s right now. So it is going to happen soon enough. But it's kind of going back to the hurry up and wait, right? So we'll get there. Yeah, I mean, the goal is, to increase the payout caps for people, right? That's the objective. That's the target here. Compared to like other prop firms like TopStep or My Funded Futures or something along those lines, our payout rate's about 300% more than those companies. So, that's a lot where the pressure comes from, right? Like on a 50K account, I'm losing $25 before payouts. But drawdown buffers, I mean, we can talk about that, and we can see what's viable or worth it for people. Um, I don't know. Maybe there'd be some like, I don't know, people can pay extra for more drawdown or something along those lines. But we can figure that out. I don't want to make things too complicated. It makes my life really difficult from a tech issues perspective. Kind of feel like the tech issues have settled down here a little bit and things are a lot smoother, which is the intention, kind of at the end of month 2. But yeah, we don't want to change too many things at once. What we're trying to do here, Shirley, and I think like our rules are pretty much just matching whatever the industry standard is, with a faster time to pass and a faster time to pay out. So we're keeping our rules very consistent across what people are used to, but we're making it easier for them to get paid. That primarily is, the thing that I would focus on. I would rather set things up that way. The other element here too, right, is if I'm evaluating people to go live and trade live in the market with my capital, I don't want to be rewarding traders who have very inconsistent equity curves, right? So if you can make $2,000, but you needed $10,000 of drawdown to get there, you're not a very good candidate to be pushed to live. So we want to be structuring things so that people are best positioned to profit well when they do get pushed to that live environment. So there is a method to the madness, believe it or not, but we'll get there. And again, it's one of those things, right? As we get more and more traders as part of the program and as part of the team, then we can look at evaluating rules. If it gets to a point where I'm making hand over fist from it, which is not the case, then we'll make it easier for people to get paid, right? So that's the whole objective here. I think there also has to be a little bit of an understanding that everyone who is trading, the vast majority of people who are trading on the prop firm are all copying my trades effectively, or a lot of them are. That creates a lot of risk that we have to mitigate, because it's not necessarily like 50% are long, 50% are short. On days where we're green, 60% of people could be green, or 70% of people could be green. And that's tremendous, but we need to make sure that the math continues to work so that I don't get bankrupted. Like, I want to do this for as long as I can. If the business is losing 50 grand a month, means the run rate is pretty short. So I don't want that to be the case. So yeah, I want it to be fair. Like, we're all capitalists here. I think we all understand that. And so we should all be incentivized to be profitable and to make money. And that's my goal for everyone, including myself. I've said this before, right? But everything I do is selfish, right? Like, I do what I think is best for me and my account. And it's the same thing applies to my business, right? So I don't, like, I'm not doing anything unfair, or I'm not doing anything unethical, but I think we have a program and a system where everyone can make really good money and everyone can get paid. And it doesn't have to be a scenario where only I make money or only you make money. It should be a scenario where you all get paid. That's ultimately what will make this prop firm stand out versus the competition. And it's my unique selling point. So I want to embrace it as much as I can. What other questions we got here, team? And I appreciate all of your guys' support, right? I don't probably say this enough, but every day I wake up really grateful that this is what I get to do for a career. It's something that I do look forward to every single day. And I know a lot of you guys look forward to it as well. And that's definitely something that, brings me a lot of joy and makes me feel pretty proud. So I want to say thank you to everyone, right? You guys are all superstars, and I love working with each and every one of you on a daily basis. Yeah, I got to get that 9/11 money. So we'll get there. And whatever we do, I'll always make sure that DTR members, you guys are always getting the very best deal possible. Don't worry. So, we talked about some possible changes here coming June 1st. It's not going to be, I'm not going to give you guys a 10% discount. Like, it'll be 50 to 60%. So you guys will still be getting, the best access you possibly can. Andrew, like, I had this realization a long time ago. I've been doing this for 6 years now. It's way more work to lie. Like, you see it all the time on social media. People get caught paper trading, or they do XYZ. It becomes so much more work to, like, keep track of the truth or the truth that you're portraying. And dude, like my life is stressful enough. I don't need that extra. I don't need that extra stress in my life. And what you've seen in the stream is that I effectively don't have a filter, right? And the reason that I can do that effectively and call out my trades effectively is because I'm not worried about those things. I would rather embarrass myself and make myself look like a little bitch than I would to, like, I don't know, get caught cheating or something like that, right? So the radical transparency is just a byproduct of basically going stream of consciousness at every opportunity I can. Because if I have to start to filter out my thoughts and pick and choose what I say or pick and choose what I show, I don't know, it just starts to be pretty unethical in my opinion. This business or this industry is already very, very low trust. And I found that, I don't know, being vulnerable, maybe that's not the right term, but showing that side of things, showing the losses, not hiding your feelings long term makes a much stronger relationship with people. So that's a guiding principle for me, right? I'd rather be an asshole but tell the truth than to I don't know. Like, I'm never trying to hurt your guys' feelings, obviously. That's not my intention. But I would rather not sugarcoat things to make myself look good. I don't think that helps anyone long term. And truth be told, it wouldn't make me a better trader. So I have to be, like, you guys have heard me say this a bunch, I'm sure. But if you want to be a profitable trader, you can lie to everyone but yourself. And by, like, the way that I run the stream and the way that I interact with everyone on a daily basis, I can't really lie to myself. It just will fuck me long term. So not worth it. I probably would have made more money in my first 5 years or 6 years doing this, but I probably would have also lost my business by now. And, like, that's not worth it. Always better to play for the long term prize. It's 100% too time consuming, Kath. Absolutely. I think I said this last week, right? But it's like that scene from Curb Your Enthusiasm where Larry's talking to Susie and he's like, they got into an argument in her house and he's like, fuck you, see you tomorrow. That's often what it's like. And I don't mean that as an insult, but every now and then, this job is stressful. Any other questions here, team? Any other questions? And I do care, believe it or not. Ultimately, a big part of why I run this business is because it's kind of my way to gamify trading, right? So I can tell how well I'm trading based on how well you guys are trading, not to sound too egotistical. But when my thoughts are clear and when I'm executing smoothly and I'm calling out things well, everyone does well or more people do well. And that for me is a really good indication that I'm trading well. So it's kind of a way to gamify it to a certain extent. All right, so we'll go final call for questions here. Final call for questions. When there are lots of stop loss trades, it's hard to have more than one contract. Advise. So, it's always working backwards from what your max loss number is, right? So everyone has a number that breaks them, and that can be a P&L number, that can be a number of decisions, that can be whatever. And that number is unique to each individual trader. So I would try to be consistent with your process as much as possible. Once you hit your limits, build the confidence to walk away and trust yourself that tomorrow's a new day and that you can make it back. When we start to change our position sizing because we want to survive 10 trades, when we know that our break number is 5, for example, we're just setting ourselves up for failure. So oftentimes it's kind of knowing when to go home. It's not very good advice, but you're like, what feels best in the moment is rarely what's best for your account long term. And if you've hit your limit and you've hit your max loss that you're willing to take on a day, the only option is to walk away. Placing more trades isn't going to make you feel better. You're just likely to compound mistakes, right? So what's going to happen is you'll be green on a trade, and then you'll be like, oh, well, shoot, I got to make an extra $500 to break even. And then you start making decisions based off of P&L instead of based on what your process says. And then that green trade that would have, put you down $500 on the day turns out to be a loss. And now you're down 1,500 or 2,000 or 2,500 or whatever it might be. And that just exaggerates whatever stressor you're feeling in the moment. So I would think about, being more deliberate in what your walk away point is and building confidence to listen to yourself when you hit it. Yeah, there's 3 courses, Matt, and those supplement the live stream. And they go over like risk management, psychology, and advanced techniques. On the DTR website, if you purchase the coach program, it'll be under the courses tab. So in the learning section. Any other questions here, team? Any other questions? All right, guys. Final call here. Yes, it's not available on mobile. So only on desktop. There's a lot of other features too, like the AI coach and stuff like that is only accessible on desktop. Yeah, well, we'll do what we can here. Hopefully, we have a good session. Absolutely. We'll trade our system, right? So, the hardest part of trading is finding your edge in the first place. The second hardest part of trading is trusting your edge when things get a little bit choppy. So, can't change things here too dramatically, and we'll do our very best to have a good day tomorrow. Facts, Kathy. Facts. All right, team. Well, if no further questions, I'm going to kill it here for the day. We'll do another DTR aftermarket close tomorrow. So 1:30 Pacific, 4:30 Eastern. And hopefully we have a good trading day before then, too. Have yourselves a great rest of the evening, and we'll see you guys in the stream tomorrow.